Hey, welcome investors to the 40 Finance channel. My name is Jeff Beers. Today I'm going to talk a little bit about when is the best time to buy stocks, whether you're starting a new position or an existing position. And really what we want to get into here is more or less like the mindset of what the goal is. Obviously, you want to buy low and sell high over the long term, but how do you manage that on different moments in time across, let's say, a full year? You're always going to have an opportunity to buy stocks any day that the market is open, and understanding when to buy is sometimes half the battle. Reminder as always that my stock picks and projections are just my opinion for your entertainment. Please talk to a financial professional before taking on the risks in the stock market. But if you like stock market tips like these and going deep on stock analysis, then please subscribe and give this video a like. I do about 3 or 4 videos every single week here on 40 Finance, so make sure you sign up to get all the latest updates. And finally, if you're interested in joining my email list, I have a 15-minute stock analysis PDF that I'm giving away free right now. The link is in the description. It goes along very well with the video that we're talking about here today. So check it out if you're interested. Okay, the most important part of when to buy a stock actually comes way before hitting the buy button on any single day. It's developing a conviction for the stock you're going to buy. Being all in, trusting your gut, doing your research, and understanding that I feel really good about investing in this company through the peaks and the valleys for the long-term future. That simple but intricate step alone will help you get past most of the mental barriers that people come into when they choose to buy a stock. Developing conviction takes some research, obviously. You want to ask yourself why why will this company grow in the long term? You should be able to answer that in a couple sentences just to yourself. You also want to research historical valuations. Just see, hey, where has this stock been trading? What kind of PEs has it been trading at? What about the EPS? Let's make sure that earnings per share are growing at least every year. These are all simple things you can find online. They're also in the 15-minute stock analysis guide. And finally, when you land on that stock that you're super excited about, it just makes sense to go read everything. Read everything you can, especially if you're new into the stock market. Type in Microsoft stock in Google and click on the news and see, what are people talking about with Microsoft stock. There's also a ton of places online that can give you some sort of analyst opinions, typically for free. So just get a feel for where Microsoft is trending right now, where it's trended in the past, and that'll give you a great inclination of what's to come in the future. Okay, so let's talk about brand new positions for a second. So this is the case where you do not own the stock yet. You're excited to get in, you've done your conviction analysis, you feel really good about where things are going, you're ready to buy. What is the best day to push the button and make that happen? And in my opinion, the easiest way to do this, and perhaps the safest way, is to, 1, make sure that this stock has been in your watch list for at least a few weeks at the bare minimum. So back on that research phase, you should immediately be watching that stock every day to just get a feel for the dips and the valleys that come into play. Next, you just want to get a feel for where the market is. Is the market high? Is it low? That will give you some clue as to what kind of price you should be paying based on the valuations you researched earlier. But most importantly, no matter when you decide to buy your stock, I do not recommend going all in on the first button push. It's sort of a common joke that every time an investor buys a stock, the stock price goes down. It happens to all of us. So you want to come in with some sort of tiered plan. On this board, I put 30, 30, 10. There's percentages you can play. Maybe you come in, if you're going to invest, let's take Microsoft, and you're going to invest $1,000. Maybe you come in at $300 to start your position. Establish a cost basis. Know how much you actually paid to own the stock, and then that will give you some guidelines going forward. Do not blow your whole $1,000 on the first run. It doesn't make sense. Now, if you're just buying one stock because you're just starting out, just pick the time. Get a good feel, trust your gut. you know that that one share isn't going to be the only time you buy Microsoft. So jump in with your best gut feeling, and then we're going to manage from there. One thing we know for sure in long-term investing is there's always going to be dips. There's going to be market dips. There's going to be bad news for the corporations or the stocks. But good quality companies are not going to go out of business, right? Microsoft is an example of a company that has so much money that it would take literally 100 years of zero profit probably for them to go out of business. So we're just looking to get in, establish our cost basis, and then look for opportunities to get in lower, or times when we feel like the company might be doing particularly special things and we project it to go higher. And that brings us to when to buy for existing positions. And I alluded to a lot of it already here. You got this flat line of the cost basis. That's the price you paid to get in on the very first time. Everything from there should kind of track back to cost basis with one exception. The one exception would be a high growth company in a bull market. If the economy is running very well and you have a high growth company, it only makes sense that you want to try to get in before that rocket ship takes off. And you can do that again over pieces over time. And then from there, there's always going to be dips, right? Even in the best economic situations, the stock market is always going to have a correction and you can balance from there. The biggest thing with existing positions, and I think where a lot of folks get caught up in, is managing your opportunity cost. So you have 3 stocks in your portfolio as an example, and you have, $1,000 to invest right now. Should I buy Microsoft, Google, or Apple? And let's just say Microsoft is having good news and they're continue to go up. Apple has bad news and they're going down. There's this side of you that wants to make that $1,000 magically turn into $1 million today, so you might want to lean towards Microsoft on the good news. But most value investors will tell you that the Apple one, going back to your conviction, you believe Apple is around for 10 plus years, right? So you're looking at Apple and like, hey, tough times, stock price is down. I still think that they are XYZ for the future. I'm going to buy it below my cost basis. I'm going to buy it at a discount. And that's the type of the decision that will pay off massively in the future. Okay, so let's do a really quick example. One of my strongest conviction stocks is Visa, and I'm enthralled with fintech and digital payments, so I'm a big proponent of Visa. Doesn't mean it matches for everyone. It's just a particular stock that I like. So we took this chart here. This is over the past year of 2020, which dips back into 2019. And just for fun, let's say this orange bar, you see the circle with the bar across. Let's say that's where I bought my first share. Roughly January of 2020, I got in Visa at 190. And it doesn't take long if you look at that 190 to see, whoa, I'm already making money. It eventually topped into the $215 mark. And then, of course, we had the pandemic, so huge crash right off the bat. And all these orange tick marks are opportunities to get below the cost basis. You're actually buying right after it turns the corner on a dip. So it comes down, you let it fall, you let it fall. And when you start seeing some life, you get in and lock in the discount price on that turn. Then it just keeps going down. Now the pandemic is a oddball scenario. You usually don't see something like this. But we go into the June calendar. If we look in the top right, when we're closer to the cost basis, you can see there's still opportunity. I got 3 tick marks there on the right corner that show you when Visa dipped below the 190 cost basis. That's exactly where we're going in, because our conviction tells us this year is what it is. We're in Visa, or I'm particularly in Visa, for well over 5 years, and these are just micro events that I'm looking to get a discount on. So the bottom line when it comes to the best time to buy a stock, keep in mind that investing is a long-term journey. if you're going to do it the safe and easy way. Yes, you could buy one share of your favorite stock every week or every month or every year. Each day would present a different opportunity. But somewhere you have to ground yourself and look at the much bigger picture. Where are things going to go from here? How long am I committed to this? When you factor those simple things, when you say, hey, I'm in for 5 years, I paid $190, today's stock price is $170, I'm going to go ahead and buy a share. Or if your budget's a lot bigger, you're going to buy 10 or 100, whatever you need to do, because you know that you've done your research and conviction. I think for a lot of people, setting a big picture goal can make it a lot easier to understand just how much you need to progress in investing. So if you want to buy a house or pay for college or retire or whatever the goal is, once you start putting big ticket items behind your investing strategy, aka a house, right? We'll just say $100,000. You start to understand that these little onesie-twosie plays on your favorite stocks aren't exactly going to move the mountain, and you become less scared. And that brings us to the next point, which is knowing how bad selling can set you back. Okay, if you're trying to buy a house and you're trying to save or get to a $100,000 stock portfolio, and you want it to grow faster than the average savings rate, then every time things dip hard and you sell, you've actually set yourself back in time. And that's the one thing that you can't get back in investing is time. Regardless of what kind of year Microsoft, Visa, Apple, whoever has this year, at the end of the day, it's literally a speck on the radar across a 5+ year investing cycle. Again, for the umpteenth time, conviction is everything. Will Apple make good iPhones? Will they continue to have customers, right? Will Visa continue to be a popular payment option? Once you know those things, you can start to understand that getting out now when it's down a little bit is actually the worst idea you could possibly have. And on that, I'll leave you with the final tip for when to buy a stock. Focusing on buying more, investing more, not necessarily in just one stock, but across the board, investing more money is far more worth your time than trying to manage at a granular level, a smaller investment. So if you have $1,000 and you're trying to manage that thing on a granular level to go up and down and make it turn into 100,000, you're probably wasting your time. The better goal would be to throw that grand in there and to leave the computer and figure out a way to get multiple more thousands of dollars into that account. All right, guys, so those are my tips on when to buy a stock. Hope you enjoyed this video. Please give me a like and subscribe if you did. See you on the next video.